Right, hi everyone. Right, welcome to today's live analysis session brought to you by IC Markets. Right, before we get things moving, let's take a quick look at the disclaimer. Right, take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. So take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into charts and trading view, right, we'll take a look at what's up on the economic calendar for this week. It's actually a pretty heavy week. We've got 3 central bank announcements, and we've got the US presidential elections sandwiched in between as well. Right, so the RBA will kick things off on the monetary policy side of things by announcing their statement on Tuesday, 5th of November at 3:30 a.m. GMT time, and following which RBA Governor Michelle Bullock will deliver her press conference as well. Now, the RBA is widely expected to maintain its cash rate on hold once more at 4.35%. And then on Tuesday as well, 5th of November, later on that day, American voters will head to the polls and cast their votes in the upcoming presidential elections as well, right? The US presidential election. So we can definitely expect high volatility and a certain level, a certain degree of uncertainty in the first half of this week. And then moving on to Thursday, 7th of November, sorry, the Bank of England releases its monetary policy report, where they're expected to cut the official bank rate by 25 basis points to bring it down to 4.75%. There's no press conference by Governor Andrew Bailey this time round. And then later on that same day, we have the Fed releasing its FOMC statement at 7 p.m. GMT, followed by the press conference by Chairman Jerome Powell at 7:30 p.m. Right. It's similar to the Bank of England. The Fed is also expected to make a 25 basis points reduction in the Fed funds rate to bring it down to 4.75%. Right, taking a slightly closer look at the RBA, right? At the previous meeting, which was in September, they maintained its cash rate at 4.35%. This marked the 7th consecutive pause on rates, and they continue to hold the view that inflation momentum remains too high, right? So they are remaining vigilant to upside inflation risk and have decided to maintain the cash rate at 4.35% at September's meeting, and it's very likely in November's meeting, which is tomorrow, they're likely to keep rates on hold once again. Right, when we look at inflation data in Australia, on the left we have the chart for headlines CPI on an annualized basis, and on the right we have the monthly CPI indicator, right? Both of which have fallen within the target range, the RBA's target range of 2 to 3%, and especially for the monthly CPI indicator, we have seen it drop down to 2.1% year over year in September, and this marked the second consecutive month where the monthly CPI indicator has fallen within the target range of 2 to 3%. Now, this is primarily due to a sharp fall in electricity prices, mainly due to the energy bill relief fund rebate that's currently in place. Now, when we take a look at trimmed means CPI, we can see that the latest result, which is the third quarter of this year, came in at 3.5%. So we have seen this metric is lower, right? We still see a significant moderation. However, this current reading of 3.5% year over year sits well above the target range of 2 to 3%. Hence, we are quite likely to see the RBA maintain its cash rate at the current levels. Looking at GDP and PMI, we can see GDP output over the last couple of years has been pretty poor as compared to what we saw in 2021 and 2022, right? In the second quarter of this year, the Australian economy expanded just 1%, right? And at the same time, we've also seen the composite PMI readings fall into contraction over the last couple of months. Remember, a reading under 50 represents contraction, a reading above 50 represents expansion. So looking at composite PMI data since July, we have seen 3 months of contraction, which signals depressed outputs for both the manufacturing and services sector, right? So naturally, we can expect third quarter GDP to be relatively muted as well, right? So despite muted economic output, right? The RBA is prepared. It looks like they're prepared to maintain rates on hold once again because we've seen trimmed mean CPI remain well above the target range of 2 to 3%, right? So take note, it was 3.5% year over year in the third quarter of this year. Now, moving over to the Bank of England, right? The Bank of England kept rates on hold at 5% at September's meeting, following a 25 basis point cut in August. Right, so this cut in August was the first reduction in over 4 years, and they're also continuing to reduce its stock of UK government bonds. This is related to the quantitative tightening policy. Right. Okay. So with inflation moderating significantly lower in the UK, right, market forecast is for this central bank to make a 25 basis point reduction at Thursday's meeting. So we can see here on the left we have the chart for headline CPI, and on the right we have the chart for the core CPI, both on an annualized basis. We can see that both metrics have eased significantly lower over the past 12 months, right? And we've seen headline CPI fall or eased down to 1.7% year over year in September, while the core reading fell to 3.2%. Right, so with inflation heading in the right direction, right, it paves the way forward for the Bank of England to move ahead with this upcoming rate cut on Thursday. And when we look at GDP data and PMI activity, we can see GDP data over the last 8 quarters or 5 or 6 quarters have been very weak, right? We can see in the second quarter of this year, the British economy just expanded 0.7% year over year, right? And when you look at composite PMI readings, we can see that in September and October, despite highlighting expansion, right, readings above 50 highlight expansion, but you can see that the rate of expansion has slowed down significantly as well, right? So momentums, both sectors, manufacturing and services, have lost momentum, right? So this rate cut is what could be needed to spur the UK economy as well, given that inflation has eased quite significantly over the past 6 to 8 months. Right, and finally coming back to the Fed, right? After making a jumbo rate cut in September's FOMC meeting with a 50 basis point cut, the Fed is poised to make a 25 basis point cut this Thursday, right? And what was also interesting about September's FOMC meeting, it was the first time since 2005 we had a FOMC official dissenting on the actual rate cut that took place. Governor Michelle Bowman had favored a 25 basis point cut rather than the 50 basis points that we saw, right? So this also shows some level of disagreement within FOMC members as we head into the last two meetings of this year. So after November's meeting, there's one more FOMC meeting that will take place in mid-December. Right, so with inflation looking pretty much under control, especially with headline CPI easing to 2.4% year over year in September, right? The Fed is looks set to make another 25 basis point cut this week. However, take note that core CPI, which is the chart on the right, has accelerated slightly from 3.2% rising up to 3.3% in September. Now, Fed will also be keeping a close watch on the core readings as well, right? So despite headline CPI continuing to moderate lower, the core reading has accelerated in September. And looking at GDP and PMI, GDP activity, GDP output and PMI activity has been robust, right? As you can clearly see, third quarter GDP, this is the advanced estimate showing growth of 2.8% year over year, while we've seen composite PMI readings hover around 54 since May, right? So very strong and robust GDP output and PMI activity readings thus far. Right. However, when you take at employment reports, it points a slightly mixed story, right? For October's labor market data, which was released last week, we saw the ADP report a nice rebound in the private sector with 233,000 workers added to private payrolls, right? This was much well above the forecast of 115,000, and not only that, the prior month's data was revised up to 159,000. So private sector grew pretty strong in the last couple of months. However, when we look at non-farm payrolls, it was a disastrous number, right? Non-farm payrolls actually came in, just added 12,000 jobs in October, while the previous month's data, which was about 250,000, was revised lower to 223,000, right? So this was the lowest job growth, right? October's reading was the lowest job growth since 2020, and it was well below the forecast of 113,000. So very mixed data in terms of job creation from the US last week, right? So non-farm payrolls usually will take the higher precedence, right? And this marks pretty bleak outlook on the future of on the future pace of job creation as well. And you can see over the last since June or since May, pretty much we've had 1, 2, 3, 4, 5 months out of the last seven fall below the 12-month average of 181,000. So job creation, as reported by the non-farm payrolls, does indicate very poor uh, jobs growth at the present moment. And looking at the unemployment rate, the only bright spot would be unemployment remained unchanged at 4.1% in October. After rising as high as 4.3% in July, it has moderated lower over the last few months and looks to have stabilized at around this 4.1% level here. But take note, should we see job creation weaken even further, that could potentially, that is quite likely going to cause unemployment rate to edge up as well as edge higher over the next few weeks or next couple of months. Sorry. Now, finally, looking at GDP forecast for the US, right? Fourth quarter, the third quarter GDP forecast, sorry, is now at 2.8%, down from 3.3%, right? Despite, although it has been revised lower, right? 2.8% growth is still pretty decent, right? When you look on uh, at how it has been playing out over the last few quarters. So still pretty decent GDP output, but job creation, right, or the labor market is showing signs of concern, growing signs of concerns. All right, now with that, let's move on over to the slides on trading view and begin our analysis on the daily index. We'll work our way down through a few of the major currency pairs. Of course, we'll take a look at cable and Aussie as they've got the respective central bank announcements coming up this week. We'll touch on the commodities like gold and crude oil, and we'll take a look at a couple of indices as well. And of course, should you have any other requests for any other instruments, please do drop them in the chat box, right? And I'll be more than happy to go through the analysis with you. All right, so starting with the dollar index, right? We can see a strong down candle for today, 4th of November, Monday, right? I guess as markets reopened this morning and Asian traders took a look at the non-farm payrolls number, right? I think that's probably what has caused this sharp sell-off in the dollar index, right? Dollar index opened at around 104.31 today, and it dropped as low as 103.60, right? So dropping almost about 70 pips today so far. As you can see, demand for, or you can see intense selling for the dollar picking up today, right? And this is primarily due to the, I would say this can be not primarily, but this can be attributed to the poor non-farm payrolls numbers that were reported last Friday. Now, looking slightly below, or looking at the pivot level, where the pivot level currently has been identified at 103.45. This is a pretty decent overlap support level, right? Previously, we can see the dollar index running into resistance here on Thursday, 8th of October. So from 7th of October, 6th of August till the 15th of August, this was a strong resistance barrier for the dollar index, after which it made a bullish breakout above this level on 17th of October and then proceeded to function as support on 18th of October and the 21st. So this then creates a nice overlap level, which we have identified as the pivot. Right, so this pivot level here is an overlap support that's accompanied by a Fibonacci retracement at 23.6%. We found this retracement starting from here, this swing low on the 27th of September, going up to the high on the 29th of October. We can see the 23.6% retracement level aligned pretty close to the overlap support. So with dollar index falling sharply today, right, this is an area where this index could stabilize and potentially reverse to climb higher. Now take note here, since this is a strong support level, and if you have been shorting the dollar index today, right, or since early this morning, identifying your take profit target at around the 23.6% Fibonacci retracement is a suitable area to do so for any short trades that you may have, right? So take note, this is a pretty significant support level, and identifying your first take profit for any short trades at around the 23.6% Fibonacci retracement level would be a suitable area to do so. Now slightly below, right, there's a nice overlap support, almost like an overlap support at 102.52. Right, we see a nice swing low taking place here in mid-March, another nice bounce here in early August and mid-August, and after which uh, we see as the dollar index was rising sharply at the beginning of October, we did see it stall around this level on Monday and Tuesday, 7 and 8 of October. So this creates a pretty decent overlap level. And once the bullish breakout takes place, this is actually a nice overlap support level. Right, so the first support is an overlap level that has the presence of a 50% Fibonacci retracement, a line pretty just underneath it. Right, and of course resistance is this overlap level here at 104.68. We see a nice pretty decent support level taking place here in mid-June. Another pretty decent support here on 8th of July, after which we see the dollar index remaining under 104.68 from 16th of July till 30th of July for a period of nearly 2 weeks before dropping lower, right? So this creates a nice overlap level, which looks to have functioned as a strong resistance barrier once more last Tuesday, 29th of October. So very clearly, pretty significant overlap level here that has been identified as the first resistance, and it's also accompanied by a Fibonacci retracement at 78.6%. So this retracement level was found starting from here, this swing high on the 26th of June, going down to this swing low here on the 27th of September. We can see 78.6% retracement sits slightly above the overlap resistance, which is at 104.68. Right, so take note, right, as dollar index approaches a pretty decent support area, and if you have shorted the dollar index since this morning, right, identifying your take profit target close to the 23.6% Fibonacci retracement is a suitable area to do so for any short trades that you may have. Right, so these are the key levels for the dollar index on the daily time frame: pivot, first support, and first resistance. Right, now let's take a look at cable. Right, we've got let's take a look at the Aussie first, right, since we've got the RBA announcing its monetary policy statement tomorrow on Tuesday, 5th of November. Now we can see the Aussie has been in a strong downtrend since the end of September, reversing from like 69.50 cents, dropping down as low as, what is this, 65.35, right? Pretty significant move over the last few weeks or even months now. Wait, oops, let me see. Where is it? We can see from its peak to trough, it has lost nearly 5.9% or about 400 pips in the process, right? Very strong move in the Aussie, right? Downward move since the end of September till the end of October. Right, so as the Aussie stabilized at around 65.60 last week, right, it made a nice swing low support, right? This is a nice swing low support taking place in the formation of a swing low support here. So this is where the pivot has been identified for today, right? Based on the daily time frame. As of today, the pivot has been identified as 65.60, and despite the Aussie gapping higher today, remember it closed on Friday at around 65.60, and it gapped higher to open at about 66.10, rising as high as 66.20 before reversing and dropping lower. So should it drop lower towards the pivot once more, this is where it could stabilize and probably stage a minor rebound. Take note, right, the RBA is expected to maintain its cash rate on hold, and should we see a monetary policy statement as well as the press conference by Governor Michelle Bullock conveyed hawkish rhetoric, we could see demand for the Aussie dollar pick up. So that would mean potentially we could see a nice bounce for the Aussie of this pivot level here tomorrow. And should that bounce take place, right, you can target this first resistance at 66.47. This is a pretty decent pullback resistance level that's accompanied by Fibonacci retracement at 23.6%. So this resistance area can be identified as a potential take profit target for any long Aussie trades that we may have, right? So right now it's pulling back towards a strong support level, and if we do see a bullish bounce off the pivot, we can then target the first resistance as a potential take profit target for any long trades. Now this 23.6% retracement was found starting from this swing high on the 30th of September, going down to this swing low here on the 30th of October, right? So we can see 23.6% aligned pretty close to the pullback resistance at 66.47. Looking slight, oh, and the pivot as well, sorry, the pivot here, the swing low support lies just above a Fibonacci extension at 127%. This extension level was found starting from this swing low on the 11th of September, going up to the swing high on the 30th of September. We can see right just below the swing low here that has occurred last week. There's a pretty decent extension level to identify this strong support zone between 65.35 and 65.60. Now, looking slightly below, right, there's a nice, a very big swing low taking place here, very nice swing low taking place here in the beginning of August. Of course, we can see this wick dropping as low as 63.47, but generally we can see this is a nice swing low support here at around 64.69, and we can see a pretty decent pullback support taking place here at the beginning of May as well. This was a very strong down candle on 30th of April, but the Aussie then stabilized on 1st of May to stage a pretty decent rebound here. So this looks like to be a pretty significant multi-swing low support level here that we've identified as the first support, and that's at 64.69. Right, so take note, if you do see the RBA maintain its cash rate on hold once more, and we see a hawkish statement as well as a press conference that could provide some lift for the Aussie, and we may have a potential bullish bounce scenario on hand tomorrow, and then we can target the first resistance as a potential take profit target should we see the bullish bounce of the pivot materialize. Now, right, so these are the key levels here for the Aussie on the daily time frame, right? First resistance, pivot, and first support at the respective levels here. All right, then let's look at cable, right? Since we've got the Bank of England uh, lining up after the RBA, and that's on Thursday, 7th of November. Right, so cable closed at around 1.2922 last Friday. It gapped higher this morning to open at around 1.2965, rising as high as 1.30 before pulling back once more, right? So we do see, perhaps we can see with demand for the dollar looking weak, right? With demand for the dollar looking weak, we can probably expect cable to rise up towards the pivot level here, right? Maybe for over the next couple of days, rise up towards this pivot level here at 1.3037. This is actually a nice overlap resistance, right? We can see cable finding support, making a nice swing low here on 12th of September, then stabilizing around this level in mid-October before finally giving way. And then we can see it has acted as pretty decent resistance as well on Monday, 21st of October and 30th of October. So this then creates a nice overlap level. So it's an overlap resistance, which we can identify as the pivot. Now this pivot level is also accompanied by Fibonacci retracement at 38.2%. Right, to find this retracement, we started it from here, this swing high on the 26th of September, going down to last Thursday's swing low. We can see 38.2% retracement sits slightly above the pivot, and we can see the 50% retracement aligned pretty well with the first resistance, which is the pullback level at 1.3149. Right, so should we see cable stall around the pivot once more, right, over the next couple of days, it helps us identify a potential bearish reversal opportunity, and should that bearish reversal materialize, we can then target the first support or the zone between the first support and the 50% Fibonacci retracement as a potential take profit target for any short trades that you may have, right? So the first support at 1.2807 is a pretty decent overlap level. Yeah, we can see cable running the resistance here at 1.2807 in the first couple of weeks of June, stalling once more in early July, and then stabilizing as support at the end of July, and then support once more in mid-August. So this is a pretty decent overlap level. Right? It's not the cleanest overlap level, but it's still a pretty decent level to take note of, and that's at 1.2807. And when we run a Fibonacci retracement from this swing low, right, we're running a Fibonacci retracement from this swing low on 22nd of April, going up to the swing high on the 26th. We can see that the 50% retracement sits pretty close to the first support, and is also is at a level where cable bounced off last Thursday, 31st of October. So this zone is a pretty strong zone, and if we do see cable stall around the pivot in the first half of this week, we have a potential bearish reversal opportunity on hand, and then we can target the zone that's identified between the 50% retracement and the first support as a potential take profit target for any short cable trades. Right, so take note, this are the key levels for cable on the daily time frame. First resistance at 1.3149, pivot at 1.3037, and the first support between the 50% retracement and 1.2807. Right, so we've covered dollar index, the Aussie and cable, as we have the respective central banks making their uh, monetary policy announcements starting from tomorrow. Right, now let's move on over to the commodities, right? We'll touch on gold and crude oil. And of course, right, do not hesitate to drop your requests for any other instruments in the chat box, right? Do not wait till the end of the session, right? Drop them in as soon as possible, right? So we have time to go through the analysis together. Right, so now let's skip on over to the commodities and we'll start with XAU USD, right? This is the instrument that tracks spot gold futures. Right, so we can see here the latest intraday high for spot gold was formed on Thursday, 31st of October, and that was at $2,790.10 per ounce. So this is where the first resistance clearly sits for spot prices. And what I see here at $2,674 is a nice pullback support levels. Previously, this level functioned as a nice swing high resistance here. And then once the bullish breakout took place on Thursday, 17th of October, this swing high resistance is now a potential pullback support level, which we have identified as the pivot. So should we see gold prices pull back, right? Should we see gold prices pull back further towards the pivot level here? This is where we can identify another potential long entry to play the bullish bounce. We can see that this is a very strong bullish move that has been in place since March of this year, right? So we look at it, this is 25th March. And then when I look across this price level here at $2,075, this was a multi-swing high resistance that had been in place since August 2020, right? The first swing high resistance took place here in August of 2020. Second swing high resistance taking place in March of 2022. The third swing high resistance taking place in May of 2023. Resistance once more at, in December, mid-December last year. And finally, we had the bullish breakout take place since March. So since 4th of March, gold prices have been rising very sharply. This is a very strong bullish uptrend that we can see here. And looking at it on the weekly, that's probably a nice bullish channel that we can identify as well. I think there's a pretty good bullish channel that we can identify over here, right? This is a pretty good one. Right, so you can see several touches on the lower bound of the bullish channel and a few touches on the upper side as well. So very clearly on the weekly time frame, right, this is a very strong bullish uptrend here. Now coming back to the daily time frame, right? Of course, first resistance is where the intraday all-time high was formed on Thursday, 31st of October. Pivot level at 2,674 is a pullback support level that's accompanied by Fibonacci retracement at 61.8%. Right, this retracement level was found starting from here, 8th of October, going up to the intraday high. We can see 61.8% aligned very well with the pullback support, which is the pivot. A little bit below, at 2,586, this is another pullback support level, almost like an overlap here because we see resistance initially taking place in mid-September and then support in early October, on the second week of October. So this creates a pretty decent overlap support level that's accompanied by Fibonacci retracement at 38.2%. And this is also a level that's accompanied by Fibonacci retracement at 38.2%. So we found this retracement by starting from here, this low on the 7th of June, going up to the intraday high, which is on the 31st of October. We can see the 38.2% retracement aligned pretty well with the overlap support here. Now it looks like gold prices have stabilized at around $2,730 today and looks to be retracing a little bit higher. Let's see if there's any Fibonacci retracements that it bounced off. It looks like it has stabilized at around the 30, just above the 38.2% retracement level. This is something to take note of as well, because it's actually, I would probably say I'm more inclined to identify my pivot here, right? Looking at how we have a pretty decent pullback support level taking place here on Wednesday, 23rd of October. That's accompanied by Fibonacci retracement at 38.2%. It's quite likely. I think this is a level that I would like to identify as the pivot, which is at 2,715. And the first support is this pullback level here at 2,672, which is accompanied by a Fibonacci retracement at 61.8% and a Fibonacci retracement at 23.6%. Yeah, I think this is a much more uh, better identification of the pivot and support based on the current price action for spot gold prices as of today. Right. So if gold continues to climb higher, right, we can of course then target the first resistance as a potential take profit target. And beyond the first resistance, how can we possibly identify the next resistance barrier? Remember, price is trading close to the intraday all-time high. So in such a scenario, we can rely on Fibonacci tools such as Fibonacci extensions and Fibonacci projections. So perhaps let's try with a projection, right? I believe you can try a projection from here, from this low on 8th of October, going up to 0.2, 31st of October, and the low of today, which is at around 2,730. Let's look at all the Fib projection levels. And we can see this is where 61.8, 78.6%, and 100% sit. So as of now, based on this Fibonacci projection, right, and should gold prices continue to climb higher, we can then use the 61.8% retracement, 61.8% Fibonacci projection as a potential second resistance barrier. And of course, should price continue to climb even higher from this point onwards, we can then use the subsequent projection levels to identify resistance areas beyond $2,850. Right, so this is a pretty decent example of how we can use a Fibonacci projection to help us identify potential resistance barriers beyond the intraday all-time high. Right, okay, so these are the key levels for gold here, right? So we've seen it continues to trade in a strong bullish uptrend, especially when we see it on a weekly time frame, right? Several touches off the lower bound of the bullish channel, a few touches on the upper channel, right? Very strong bullish momentum here and bullish uptrend. Okay, so these are the key levels for spot gold prices here. Let's move on over to crude oil. XTI USD is the instrument that tracks WTI crude oil futures, and it gapped higher today as well, right? Crude prices closed at $69.69 per barrel last Friday, and it gapped higher to open at $70.98, and it looks to be rising strongly towards the $72 mark. Right, so when I look across at around $72.50, this is a strong overlap resistance level that has been identified as the pivot. So the pivot is actually an overlap resistance that's accompanied by a Fibonacci retracement at 50%. Now this 50% retracement was found by starting from this swing high on the 8th of October, going down to this swing low here on the 29th. Right, when we look at the pivot level, why is it an overlap resistance? Right, we see a nice swing low taking place here on 5th of August, a second swing low support on the 22nd of August, after which this level proceeded to function as resistance at the end of September, functioning as support once more on 9th of October, and then resistance again at the end of October as well. So this is why I think XTI USD could potentially stall once more. So that means, right, if you've gone long on crude oil this morning, right, especially with a gap higher, right, after gapping higher and you've decided to ride the momentum. So if you've gone long on crude oil this morning, right, identifying your take profit target at around the 50% Fibonacci retracement is a suitable area to do so for any long trades that you may have, right? So this is a pretty decent resistance barrier that's been in place since 22nd of October, right? So take note, strong resistance level. XTI USD is approaching the 50% retracement and the overlap resistance, which is the pivot. Now, first support at $67.74 is a multi-swing low support, the first of which took place on 27th of September, and the most recent one taking place last Tuesday. And of course, first resistance is a little pullback resistance that occurred on 11th of October, and is also accompanied by a Fibonacci retracement at 78.6%. Right, take note, these are the key levels for XTI USD, and is rising strongly towards the 50% retracement and the pivot level, which is an overlap resistance here. So good idea to book some profits for any long crude oil trades that you may have within this resistance zone. All right, okay, so we've covered a couple of the commodities. Let's move on over to the indices. Let's take a look at the DAX, right? The DE40 is the instrument that tracks the DAX futures, and we see This index rebounding strongly last Friday, and that momentum has continued today as well, right? But what I see now is it's approaching a pretty decent pullback resistance level, right? We can see on Wednesday, 23rd and 24th of October, Wednesday, Thursday, the DAX stabilizing at around 19,354 to stage another rebound before finally giving way last Wednesday. So now what was a pretty decent pullback support level is now a resistance, a potential resistance area that's also accompanied by Fibonacci retracement at 61.8%. Right, so if you've uh, gone long on DAX as of last Friday or perhaps from this morning, right, identify your take profit target at around the pivot, which is close to the 61.8% Fibonacci retracement, is a suitable area to do so, right? So any long trades that you may have for this instrument, targeting your first take profit target at around 61.8% is a suitable area to do so. Beyond that, right, the next resistance comes in at 19,663. This is a swing high resistance close to the intraday high. The intraday high occurred on, I believe here, 17th of October for the DAX, and that's at 19,681. And the support, there's a nice support overlap level at 18,949, which we have identified as the first support, and is also accompanied by Fibonacci retracement at 50%. And we see a swing high resistance taking place here at the end of August, resistance here as well in mid-September, pretty decent support here on 26th of September, very nice support here on the 4th of October, and it looks as though last Thursday, the 31st of October, the DAX stabilized around this level once more and reversed pretty strongly. So this is a very strong overlap support level that's also accompanied by Fibonacci retracement at 50%. Right, this retracement level was found starting from this swing low on the 10th of September, going up to the intraday high on the 17th of October. Right. So once again, DAX has rebounded strongly since last Friday, and you can identify the first take profit target at around the 61.8% Fibonacci retracement here, which is close to where the pivot sits. Right, now let's move on over to US 500. Right, US 500 has rebounded pretty strongly as well, especially last Friday, but it closed, it pulled off its highs to close at around 5,727. And today as well, it looks to be stabilizing and looks to be pushing higher as well. But when I look above at 5,805, I see a pretty decent pullback resistance level that's accompanied by Fibonacci retracement at 61.8%. Previously, this level functioned as strong support from 15th of October till the 30th of October before finally giving way on the 31st, right? So this was a pretty decent pullback support level in the past, and it now could be a potential resistance barrier, which is also accompanied by Fibonacci retracement at 61.8%. This retracement was found by starting from the intraday all-time high on 17th of October, going down to the low of last Thursday, right? First resistance is pretty clear, right? It's at 5,882, which is the intraday all-time high. First support is a nice overlap level, right? We see a nice swing high resistance taking place here on 17th of July. Another nice swing high taking place here on the 3rd of September, right? And after we saw a bullish breakout take place on the 19th of September, this level then proceeded to function as pretty decent support from 1st of October till the 8th of October before staging a nice rebound here, right? So you can see a very significant overlap support level that's accompanied by Fibonacci retracement at 38.2%, right? So we've identified this zone as the first support. Right, the 38.2% retracement was found starting from this swing low on the 6th of September, going up to the intraday high on the 17th of October. Right, so once again, similar to the DAX, right, for US 500, if you've gone long on the US 500 as of yesterday or perhaps early this morning, right, and should it reach close to the pivot level over the next couple of days, right, this would be a suitable area to identify a potential take profit target for any long trades that you may have, right? And also probably I want to highlight this level here as well, this zone rather, right? I believe there might be a 50% retracement as well between the 50 and 61. Oh no, wait, no, sorry, it's going to be 38 and 61. Yep, this is a pretty decent resistance barrier here as well. So take note, right, because we see this zone here, right, take note in between the 38.2% and 61.8% retracement level, this is a pretty decent resistance barrier as well. So take note, should it fail to climb above the 38.2% Fibonacci retracement. That's something to take note of as well, right? Especially if you're long on US 500, a failure to break above the 38.2% retracement level is something to be concerned of as well, because it's actually a pretty decent overlap resistance as well. When you look at it here, it served as resistance at the end of September, resistance once more in early October, and then functioning as support on 23rd. So it's a pretty decent overlap resistance that's accompanied by the 38.2% retracement. All right, so these are the key levels here for US 500. Right, and before we move on, I'm just going to launch a poll and truly appreciate it if you guys can give your feedback with regards to today's webinar. And of course, we'll continue with crypto. We'll take a look at Bitcoin and Ethereum and any other instruments that you would like to see as well. All right, truly appreciate it if you guys give your feedback with regards to today's webinar, and we'll continue with by looking at Bitcoin now. All right, so after making the swing high resistance at around $73,650 on Tuesday, 29th of October, Bitcoin has reversed quite sharply, dipping under 68,000 over the weekend. It looks to have stabilized at around $68,000, right? And it was actually rising up today, but it looks to be pulling back. It's back in the green again, so it looks like it somehow has stabilized at around $68,000 as of now. Right, so why I do see a strong support level is this overlap at $66,130. This is a pivot level. This has been identified as the pivot, which is accompanied by the 50% Fibonacci retracement. So we started this retracement here from this swing low on the 10th of October, going up to the high of last Tuesday, 29th of October. You can see the 50% retracement aligned pretty well with the overlap support, which is the pivot. So should we see Bitcoin fall further, it could stabilize once more at around 66,130. Right, our resistance is pretty clear. Like, it's a swing high resistance that occurred on 29th and 30th of October. First support is this almost like a multi-swing low here, like a double bottom here taking place. First of which on 2nd of October, second one on the 10th of October. That is a nice multi-swing low support at $60,117, which we've identified as the first support here. Right. So for Bitcoin, right, we have a potential bullish bounce opportunity. Should we see this pullback extend even further and we see Bitcoin stabilize around the pivot, it helps us identify a potential buy entry. And at the same time, right, conversely, before that, if you have shorted Bitcoin since last Wednesday or Thursday, right, identifying your take profit target between the 38.2% and 50% retracement levels would be a suitable area to do so. Right, this is a pretty decent support level here. Right, so for any short Bitcoin traders, right, if you've gone short Bitcoin as of perhaps last Wednesday or Thursday, identifying your take profit target between the 38 and 50% retracement levels is a suitable area to do so, right? So take note, short traders, for Bitcoin, this is a pretty strong support zone. Identifying your take profit target here would be a wise choice, right? And similarly, should we see price extend all the way down to exactly where the pivot sits, it helps us identify a potential bullish reversal or bullish bounce, and to help us identify a potential long entry, right? So these are the key levels for Bitcoin. Let's move on over to Ethereum. Looking at Ethereum, right? If you actually look at it, it's actually been trading sideways pretty much since 15th of September, right? If you look at it, it's just been trading within this box here, right? With the lower bound at around $2,300 and the upper bound at around close to $2,800, right? So it's just been trading sideways pretty much. Or actually, you can even extend it all the way till here, right? It's been trading sideways since 8th of August, right? So pretty much it's doing nothing. Oh, of course, it's been the down moves, the downside moves and upside moves have been relatively strong. But if you look at it in terms of overall momentum, it's just been trading sideways between these two channels here. If you look at it from this peak to trough, it has lost about 23%. Yeah, it's a pretty big move. And conversely, from this trough here to this peak, it has also gained about 26,000. So despite sideways trading, right, you can see the swings to either side are pretty large, right? At least 20% moves in each way, in each direction. Now, looking at where Ethereum is currently trading, it's trading around $2,466. Right, it's trading close to what I see is like a nice support level at $2,347, right, which has been identified as the pivot. We see a nice support taking place here on Thursday, 3rd of October. Another support taking place on the 10th, and we can even argue here a nice swing low support taking place here on Friday, 25th as well. So this creates a pretty strong multi swing low support level, which we've identified as the pivot at $2,347. In terms of resistance, right? So that means if we do see Ethereum fall back towards the pivot once more, it helps us identify a potential buy opportunity, right? To play the bounce for Ethereum off the pivot level here. And should that bounce materialize, we can then target the swing high resistance that occurred on Wednesday, 30th of October at $2,656, right? This swing high resistance can be used as a potential take profit target for any long trades for Ethereum that we have, right? So if you do see this bullish bounce materialize, we can use the first resistance as an exit opportunity or to identify a potential exit opportunity. Looking slightly below, the first support at $2,044 is a swing low that has taken place on Monday, 5th of August. Right, so these are the key levels here for Ethereum. Right, thanks everyone for those who have voted in the poll as well. Truly appreciate it. Just going to close the poll. Right, and right, if there's no further requests, then we'll just do a quick recap of what we've covered so far. Right, so take note, we've got 3 major central bank announcements coming up this week. Right, we've got the RBA up first. Right, the RBA is up first on Tuesday, 3:30 a.m. GMT. That's tomorrow, right? Where they're expected to maintain the official the cash rate on hold once more. Right, they're looking to pause for the 8th consecutive meeting, I believe. And the press conference by Governor Michelle Bullock is going to be pretty important as well, right? As we will get further insights as to uh, what as to what future actions that we can possibly expect from the RBA over the next couple of months, right? So we could see potentially a statement and press conference that conveys somewhat hawkish rhetoric, and that could be enough to lift the Aussie tomorrow. And after that, sandwich in between, take note we have the US presidential elections taking place on Tuesday, 5th of November as well. Americans will head to the polls to cast their votes. And over the next couple of days, Tuesday to Wednesday, or perhaps maybe even beyond, is definitely going to create a lot of uncertainty and higher volatility for financial markets over this period as well. Then on Thursday at 12 p.m. GMT, 7 November, the Bank of England is expected to cut its official bank rate by 25 basis points to bring it down to 4.75%. And later on that day, the Fed too is going to make a 25 basis point reduction as well to bring the Fed funds rate down to 4.75%. And at 7:30 p.m. GMT, Chairman Jerome Powell will deliver his press conference, and all eyes will be glued on him as well. Right. So take note. This is the key events to watch out for this week. Of course, there's a lot of other macroeconomic data points that will be released. Right, of course, we can't go through every single one, but take note, we've got 3 major central bank announcements, as well as a US presidential election sandwich in between. All right, that's all I've got for today, right? Thanks everyone for tuning in to today's session. Do look out for all upcoming webinars brought to you by IC Markets, right? We've got a combination of educational topics and live analysis in English, Thai, and Bahasa as well. All right, take care everyone, have a great trading week, and catch you all in the next session.